Hello, good afternoon everyone. My name is Rita and my strain ID is AMV24420. Today I'm going to discuss about my assignment, and the assignment is a word report, and that is 3000 words of my assignment report, and we have a 10% of presentation as well, and 10% of in presentation we have a video presentation. And now today I'm going to individually video presentation, and in my video, and my topics is accounting for income tax. Mm, in this report, it's briefly discuss everything in the report. Now I'm going to give the short definition and short briefly discuss with my bullet points. Now I'm going to talk about the table of content of my assessment and the table of content of my video report, video presentation as well. In the presentation I just describe the bullet point, and for the few minutes I'm going to give the definition of the each theories. In my table of content I will, and in your teacher you will, so you will see that what I have done in my assessment. And now for the video presentation I'm going to just talk about the just have a look for the quick summary or the quick briefly discuss with the table of content. In the table of content I have lots of things include, which is first one is introduction, second one is accounting concept, accounting profit, taxable profit, temporary differences, taxable temporary differences, deductible temporary differences, deferred tax assets, deferred tax liabilities, and criteria for the deferred tax and income and expensive, lots of things which is related to the accounting theory and which is mostly related to the accounts only. And here I'm going to briefly discuss about the introduction first. Introduction is all about like what my assignment is and what my report is. What and the introduction is like a it looks like a short conclusion, but I'm going to talk about the introduction as well. The decision makers who is doing the final decision, the board of the director or the board of the company, board of the office who is doing the final decision. The decision makers, the board or authors portion of a corporate firms calculated the income tax payable of the company. It is mandatory to recognize the taxable income as well as the taxable liabilities in relation to the income tax payable. It's according to the Meriton and Ravens in 2019. In the following report, we will discuss different aspects of the income tax. For this reason, the ASX, Australian Security Exchange Company, listed company has been selected on account Ascent Group Limited to discuss the factors. The below mentioned report will be discussed. Here you will in the report you will find that whatever I have written in the report. Now I'm going to talk about the definition like current tax, deferred tax liabilities, deferred tax assets, everything. Now I'm going to talk about the accounting theory first, means accounting profit. The company's total income or the company's total income or the company's total earning, whatever the company earn or income in the financial year, which is in the June July, end of the June July. Here in the end of June July we have the financial whole report. The report discuss whatever the income, whatever the expensive, where we expensive, how we got the income, everything details in the whole yearly, January to December, all the income tax or income expenses you will see in the financial report. The total amount which is a company earning or what the company expense, that's the total income, that's called the accounting, that's called the income tax of the company. Here I'm going to about the current tax, the amount of tax estimated to be payable or recoverable in the respect of the taxable profit or loss of the period, along with the adjustment to estimate in represent the previous period. Whatever the past year, whatever we have income and whatever we have expensive, all everything should be recorded year by year, like 2014 to 15, 15 to 16, 16 to 17, 17 to 18, like go continue. Now, another is deferred tax, estimated future tax consequences of transaction and events recognized in the financial statement of the current and previous period, which we have the past and which we have in the future. All everything we have, we estimate for the future, and for the past we have calculate all the income and all the expenses as well for the company. Whatever we paid for the staff, whatever we expense for the company, whatever we expense for the staff, everything we have to calculate. And another is a deferred tax liabilities, the amount of income taxes which is corporation tax payable in future period in respect of the taxable temporary timing difference. Income tax and the income liabilities, they both are correlated, they both are interrelated, such as finger and nail. If you guess, the finger and nail is just the example. Taxable income and the taxable liabilities. Income means income, whatever we earn, and liabilities is we have a responsible for that purpose, or we have responsible whatever we have, we need to pay for the company, or whatever we need to pay, we must have the responsible. That's the liabilities. Another is deferred tax assets, are the amount or the taxes amount, income taxes recoverable in the future period in aspect deductible temporary, deductible carry forward, unusual taxes, the carry forward and unusual taxes credit. That's the thing. And another is accounting profit. We already talk about the accounting profit and taxable profit. Whatever we get when we pay, when we import the things, or when we export the things, import and export, they both are correlated as well. If we import the things, then we need to pay the tax to the government, and government in the end of the financial year we can collect that tax and taxable money as well. And here I'm into talking about the taxable profit. The taxable profit also the same thing, and temporary differences. The temporary differences arise in the business when income or expenses are recognized in the difference period of the financial statement. That on the tax return is for the view of the temporal differences may arise due to the revenue recognized, insecure, and the depreciation calculated, etc. Hence, it can be stated that the temporal differences may arise because the differences in the carrying amount of the tax base. Means whatever we have in the whatever we pay in the financial year, or whatever we pay in the end of the financial year, we can claim later on. End of the financial year, we need to give them a proof. We need to have invoices for everything. Then we can apply for that taxable amount. And at the conclusion, I want to say that in the report you will see what I'm writing in my report. It's now I'm going to give the conclusion. It can be concluded from the above report that taxable income and the accounting profit can be different. Taxable income and the profit income, whatever of the whole year, that's the income. And whatever the profit means income minus expenses. Whatever we have expenses, we have to deduct from the income. Then after we get profit only. The income tax is always payable to the taxable profit of the firm, and the income tax is determined by application of the sanitary is shown as a profit and loss account. And the company, while the income tax paid are always reported in the cash flow statement of the business. In the end of the business, we have the cash flow statement. We have to show everything in the cash flow statement. Thank you so much for listening my video presentation. Hopefully, I'm not sure, this is my first time I'm doing myself the presentation alone. I didn't know how it go. Please accept my video presentation. Thank you so much for your time. Thank you, sir. Thank you.